Okay, there we go. My microphone was not connected. Hello guys, how we going? Trying a new chat room setup today, and I'm not sure whether or not it's working. So if you are here, say g'day, welcome. Um, and I'm gonna see if this is working. If not, I might not see any of your messages for a little bit, and I might have to flip over and sort that out. I know you can't see me right now. Let's go ahead and change that. There we go. Hello. Good morning, everyone. Welcome. Let's have a look, shall we? Can hear, but you can't see me. There we go, Heather. Thank you for letting me know. Okay, the new chat setup working. That's a good sign. That's a good sign. So this monitor over here is now dedicated. There I am. Is now dedicated to you guys. So this monitor, nothing but your guys' beautiful messages. So that works quite well. I forgot to put out the notification. Did it a little bit late today. So I'm expecting numbers to be a little bit slow flowing in, but that's okay. We can deal with that. How's your week been? How's your trading going this week? I always like getting the end of the week. I like that we can reflect on the week in my trading rooms, so that we can sit back and give you the incentive to have a look back and see what's happened and what decisions you've made and whether or not they were the right decision or the wrong decision. Um, Enjoy that. You can hear me all good, audio's all fine. I've been playing around with microphone setups. I've been playing around with cameras, monitors. It's been getting a little crazy over at Jordan's house. But I think we're up and running all right. Are we good if I can? You've been trying shorter time frames and having a hard time. Shorter time frames definitely a little bit harder, as you need to be more sincere in your decision making and the less reliant because there's less volume obviously at those points in times. What in particular have you been trying? And what's the hard time? Where are you struggling with trying those? We had a couple of setups that had potential this morning, but they haven't gone anywhere. So we'll need them to do a fair bit in order for them to actually draw us in. Um, Silver could be a good little fading opportunity in the morning, but I don't like fading commodity. We'll see. Might be able to pull something from it. We'll have a look. We'll give it a little bit of time, see if we can get anyone else in here, or it just might just be the two of us, but that's okay. Been a little bit quieter than usual. I've gone ahead. Just it to be quiet the one time that I'm trying out a new backtesting, but wanting to move more towards day trading rather than swing. Not having luck with stop loss placement. Okay. You're wanting to. Okay, so what's the pool? What's the pool that's wanting you to go into day trading? Carlos, welcome. It's good to see you. Thanks for tuning in. What's the pool hormone that's making you want to go into day trading rather than swing trading? Hi, Paul. Thanks for tuning in. It's good to know that that's working. I will have a look for you. Aussie dollar, Japanese yen. It is on my list, and it is a short that I was looking for, but it's not in the area that I wanted to. Hi, Tinnis. Good day. Hello, welcome. All right, there we go. We're getting some numbers in now. We're getting some numbers, so we can start moving on with what we wanted to chat about. But Paul, let's go ahead and let's start diving into the charts, shall we? So where are we? Let's go over and transition to our trading view chart. And as you can see, Paul, this is Aussie dollar, Japanese yen. You've asked for a short. I also do like the idea of shorting. Now, as a whole, on the higher time frames, you can see we've popped up below the recent highs, moving up there, but it's kind of sitting in this area that you can see displayed here. Okay, so we've managed to get out of this large move. We've pulled back into that area, broken this high, set a new high, pulled back, broken this high, set a new high, maybe a bit more of a pullback. Now, ideally, I'd like to get up above this high in order to actually short this morning. We don't have any news due. Only New Zealand dollar is going to have some volatility this morning. But yeah, but that's fair trek. I need it to move like 20 pips to get up into that area. But if we do get up into this area, definitely looking for a Aussie dollar Japanese yen short this morning. And we're gonna see what that can do. We're gonna see what that can do. It was interesting to see how the Aussie dollar reacted to US dollar CPI. We obviously had that massive news come out, and I'll talk through the US dollar CPI momentarily, and how it moved charts and how it moved the correlation dollar. You see, like almost every chart moved, right, and moved quite substantially at that time. Now, even currencies that were completely unrelated to it still moved a large amount. There was a massive increase in volatility. So you're probably right, Carlos, in not trading anything news related, at least with CPI this week, because no matter which directional bias you had on most currencies, it just kind of went wherever it wanted to go. So it was interesting. It was interesting to see. It was interesting to watch, and it was interesting to watch unfold. But relating back to you, Paul, I am looking for those shorts this morning. Do you have a similar analysis to that? Would like to be able to start a trade, get into a move to place where I can either cut my losses or move to break even and go do something else rather than have such a long time with exposure. Okay, so you don't want to be overly exposed to the market. That makes sense. That's fair enough. The screen looks really blurry. Okay, that's a little worrying. Like what type? Like a connection blurry, or just like it's not doing too hot? Let's have a look here. Is it the chart that looks a bit blurry? Can't see any of the fonts. Okay, is anyone else having that issue? So we'll just momentarily while we figure this out. It looks fine to you, Tinnis? Okay. Too fuzzy, maybe it's just my poor eyesight. Either that or down the bottom of the screen you might have a quality thing and you can up the quality a little bit. And you might be able to see it a little bit better. But I'm glad it's not a universal thing, because that would have been a little bit worrying. But yeah, anyway. So you're looking to be able to micromanage your positions, and you don't want to be overexposed, which is fair enough. That's a personal thing that people like to do, not being exposed, especially in such volatile times with the different news we have, the inflation, potential recessions. We're in a bull market. The Nasdaq just got into a bull market, which is crazy to say and to think about, but it is what it is. We have technically entered a bull market. It was that the quality setting? No worries. So it's some crazy times, and there is extreme volatile events going on. There's a lot kind of going on, and it is a time where a lot of people are looking to be underexposed or to be risk off, so to speak. Day trading is a way of doing that because you're not exposed to anything too drastic. Which is fair enough, but day trading it's definitely a lot harder. It's a lot more attractive to a lot of people, having the adrenaline and the ability to quickly make money in out, and then you only work for like 2 hours or 3 hours a day. It's definitely attractive, but it is a lot more difficult than swing trading. Hi Mick, how you going? Welcome into the stream. Good to see you. All right, opportunities this morning I was looking at. Right, I'm not touching the New Zealand dollar because we do have some expected volatility coming in early this morning. Okay, little things. We got the manufacturing PMX. the manufacturing index, which is going to be the biggest mover. I'm not too worried about the FPI, but the manufacturing index is going to be a key indication because that then leads through to indicating different things like employment, different things like CPI. You can get a good idea off of the manufacturing index. Is this the wrong time frame? Never mind. They've already gone. We are looking at New Zealand dollar. Sorry, my chart's just glitched on me there. Okay, so New Zealand dollar opportunities are valid. So I'm going to add New Zealand dollar Japanese yen, very similar to Aussie dollar Japanese yen, Paul, that you were just talking about. New Zealand dollar Swiss franc's got potential. Obviously, we can sit up in this area. Someone else is obviously buying this too. That might have actually been me. It looks very similar to how I would have traded it, but I don't remember drawing that. If we can pop up above this area, potentially good for a short. The only thing I don't like about it is the Swiss franc. I don't like trading the Swiss franc early mornings, to be honest with you. But realistically, there is an opportunity to get up here and then to fade it back in. You know how we trade our morning sessions. Not touching New Zealand dollar CAD. Great British Pound New Zealand. Looking pretty juicy. We've had two good movements on the trot. And then we kind of sat flat. And you can see where we're sitting flat here in this area. You can see we're just sitting in here. If we can get a pop below prior to 11 a.m., look to fade that back in as well. Do you know how to trade? I'd like to say so. Yeah, I reckon I probably know how to trade. I can achieve consistent results by being risk on in the market. I guess that would be my answer. So if we can get a pullback below here, I'm going to look to fade that back in on Great British Pound New Zealand. That's probably the best New Zealand dollar opportunity we have here early this morning. Neither of the pounds there are going to help us. Pound CAD is getting close. Yeah, Pound CAD is getting close. But it's interesting because we've just kind of reset ourselves, right? We had this large spike, which was mostly based off of the US dollar CPI, the inflation data that's come out. And then we've reversed all of that within a day and a half. We've pulled back into this area, which it was already sitting. So if we do manage to get below, I feel like there's going to be some strong power. Compared to what we usually look for with just a little pop up and then fade it back in, I do feel like there might be some power in a move if we do get into these areas, which makes me a little bit nervous to try and fade that. I don't think we'll get down to this level anyway. I don't think we'll manage to get down to this level in this morning session. But if it does, I'm just a little worried about the way it's been moving recently. I think there might be a bit of power in the orders below this area. Great British Pound Aussie dollar is very similar to Great British Pound New Zealand dollar, which is very common. Only this time you're looking at more of a triangle kind of push in rather than a set square. Now the issue is we'd have to get all the way down here for it to technically hit my trading plan with these Asian session trades, which realistically I don't think is going to happen. We've already moved 20 pips there. I needed to move, another 34 pips to pop below within the next hour and a half to then push it back up. Not going to happen. Not going to happen realistically. Euro Japanese yen, already spoke about it. Looking to get up in this area. We've got this kind of imbalance for your imbalance traders. You got this area where it was just that CPI data once again up here. However, we are sitting very close to yesterday's high of the day. You can see yesterday we did pop below. And actually, I think I shouted out to you yesterday, Heather, and said the best opportunity yesterday after the CPI data come out was on Euro Japanese yen, but I just couldn't find the entry point. This is that right there. So you see, we did pop below the low of the day, but I wasn't necessarily looking to trade. I wanted something convincing, just solely because this indicates volatility, and a lot of people would have been pulled into the market after that news. So I was expecting some increase in volatility. So realistically, if we were going to have a trade yesterday, while that only moved 32 pips, I would have been happier sitting around like the 45, if not closer to 50 pips, and then fading it in. While it only went about 30 pips, and then like it was a perfect trade. But I just didn't like. I thought it was too short. I thought only 30 pips was going to be too short after having such large news. You know, that news moved 140 pips at the end of it, 170 pips in a matter of an hour. I did want to get a bit more than 30 to 35 pips prior to getting involved in that. But I thought I'd explain that for you because I know you reached out yesterday too. What is that? Yeah. Cool. Do you trade futures? I do not. I don't trade futures, I'm afraid. Is I having trouble with my stream today, or is it just me? Did you take a trade yesterday, Heather? Around this area? I remember chatting, I think it was in the Discord, right? Was it on general chat? Yeah, good Asian fade, so many pairs of US inflation news. Thought your fade approach the open. Imagine you'd trade your butt off. Unfortunately, not. Didn't have any trades. Euro, Japanese yen, most likely, but didn't get. Yeah, yep, that's right. So yeah, Euro Japanese yen was looking the hottest. You see, we even had a fade opportunity later in the day, but obviously there's a lot of volatility around that time. But it was looking for the best opportunity. Euro Japanese yen offers a lot of different fading opportunities. You can see when we get like these higher days. Now, bit unfair because it's a bit correlated with the US dollar CPI data. Euro Japanese yen. Okay. Neither of them use the US dollar. US dollar inflation data came out and it moved 170 pips. That just shows you the power of volatility in the US dollar and the hedging of positions that goes on in FX. It's pretty incredible. But as a whole, best opportunities, we're looking at New Zealand dollar, Japanese yen. We're looking at Aussie dollar, Japanese yen. Shout out to Paul. And I think that's going to be pretty much it. But we need this to do a fair bit to get up above this area for us to actually fade back into. So not overly confident in the ability to do that. Don't have any news expected, but we'll see. We'll see what can come of it. Let's have a look at the S&P. That was a nice pump, wasn't it, on the S&P 500, up 1.5% in a matter of 5 minutes. That was a good move for anyone that's been buying into stocks, as I said a couple of weeks ago. Great time to be buying up stocks. Great time to be buying up equities for long-term investments. 100%, it's a good time to be doing that. So we're up. Yeah. So we're in a bull market now on the Nasdaq because we're up 20% from the recent lows. Now we also almost entered a bull market around this area and it's stumped down. Now we've come back up and we're sitting in this area. Yeah, I'm not saying things are going to run to the moon. I think we still might see a bit of levitation. I think in the Nasdaq we might come back down and retest this area, then hopefully head higher. For all we know, this might just be a pre, and for it to dump again. But only time will tell. And anyone that tells you they know, they either have inside information, which is going to be extremely hard to have on a whole market, or they're delusional. 9 times out of 10, they're probably delusional. I can't even speak. It was a great little setup. That's on the daily chart, though. It's not something I really trade. There's no point mentioning that. Yeah, market's going to be slow today, unfortunately. I think everyone's made their money through that CPI data. Which, why did anyone tell me why the US dollar moved so much on that data? Does anyone know why? Why it moved the direction it did, and why it moves so much? Got a couple new things coming through as well soon. Um, Inflation's came in way below expectations. Correct, Bob. Hopefully, a sign for the economy. People pulled dollars and bought equities. Bang on. Bang on. So the reason the US dollar got absolutely smacked, um, which was actually it was good news for the US dollar, but it got absolutely smacked, and it's exactly what Horman just said there. Everyone's pulling their money out of the dollar and going into equities. That is a good sign. All right, even though the US dollar got smacked, that is a good sign. It means inflation's pulled in a little bit more aggressively than expected, and I don't think that's a sign of what's yet to come. I think we still might sit around that 8.5 for a little bit longer, but it did pull right the way in. Got to be really careful because a lot of people are going to be like, "Oh, yeah, inflation's done now. We can go out and spend again," or whatever it might be, and it might push that back out. People tend to get ahead of themselves. So that might come back sitting around 8.5, may even get back up to 9, or who knows, we could even go up to 10. But this move right here was solely based off of everyone getting out of the US dollar and getting into equities. Spot on there, Heather. Well done. Fed may only raise rates 1/4% or 0.5% instead of 3/4. I think they still need to pump those rates up. What, do they have a forecast for those rates yet? When is the next? When's the next interest rate decision for the Fed? Anyone tell me when it is? Is it October, is it? Uh, quick scroll through. It won't have the forecast yet anyway, but I want to have a look. Have a look. Where are we going? I don't know. All right, so it's not that important, right? We're not gonna. September 21st, is it? Thank you. September 21st. Let's go. Take me there. FOMC statement. Um, Look, realistically, I'm still sitting at being hiked aggressively. I don't think they're going to get ahead of themselves, and I think they should know better not to get ahead of themselves, even though inflation brought in. I do think that they're going to sit steady and still aggressively hike those interest rates. It's way too early. When you do hike an interest rate, it lags, right? It does take a while before that starts seeing some fruit. So I don't think they should be looking to ease interest rates just yet. I think they should hold on a little bit longer. And I'm willing to place my bets on that they probably will hold on a little bit longer. Luckily, I was short US dollar, Japanese yen, Great British pound, and long when CPI was announced. My account went way green and removed to take profits because I thought it would go through. And it risky, very risky being in positions during that announcement, especially when they were forecasting a lower inflation rate. And we had so many people, like a lot of people copped bad slippage. And you do. I mean, look how much that moved in a matter of. If we go on the 1 minute chart here, look at that. In 1 minute, it moved 183 pips. And we had people complaining to me and complaining to us at the firm, oh, what the hell? I had a stop loss and I lost more than what my stop loss was equal to. I was like, well, yeah, that's called slippage. I'm like, that's part of trading. That's not something we control. It's not something we can control. It's slippage. Um, but yeah, you got to be very careful, Bob, because even though you have a stop loss set in these circumstances, it will just rip through it. it will just rip through it, especially these high events. And it's happened to a lot of people, and it's happened to me plenty of times. It's part of trading. Like if you were to buy here and you had your stop loss there, and your stop loss was equal to about $100, there is a solid chance that you wouldn't have got taken out of the position to down here. Okay. The market moves so quickly that they can't fill your position at this price, so they fill you at the next available price, and that's down here. So you could have $100 stop loss, but realistically lose about $300 in that position. It happens, and it happens very regularly when we're trading these highly movable events, which is why I always recommend to traders if you are holding a position during these events. Now, if it's a red event, you can usually pass straight through it, right? You can usually pass straight through it, no problem. Um, but if it's a red event and they're expecting a change in direction or a change of confluence on what that event is, my biggest advice is to just close the position. Close the position or hedge the position, because it's going to move the market. And yes, sometimes it'll go your way and you'll make a hell of a lot of money. Awesome. But that's complete luck, right? That is complete. There's no getting around it. There's complete luck that the market, got it that way. It could easily go the other way and completely, as I mentioned, just stop losses here. Yeah, you think you're safe. Bang, you don't get out till down here. It happens. It's called slippage and it sucks, but it is a thing. Slippage got me pretty bad that day. There you go, Clayton. I forgot to check news that day. I had a short on GU and my stock got filled like 50 pips higher than what it was set at. Lesson learned, check the news. Exactly right. There's a live example of it. Slippage is a very real thing, especially when this, like in 1 minute, it moved 180 pips. 180 pips in 1 minute. Like that is a substantial move. And if you got a stop loss there, there's a good chance that you're not going to get filled at where you put your stop loss. You're going to get down here, or even down here once it starts settling. And like Clayton's just said, he had a stop loss. He thought he was good. 50 pips past his stop loss is where he got closed out. 50 pips past. Bit of an example of what could go wrong. Ben, would you recommend limiting scope, trading universe, or trading a wide variety of instruments? It depends on how you trade. If you, it all comes down to your trading system or trading strategy. Now, each pair or each asset is obviously going to need its own spectrum or strategy because they all act a little bit differently. You can't have like a strategy that works on Euro, Japanese yen and do the exact same thing on Great British Pound, New Zealand dollar. It's likely not going to happen, right? They're going to react differently at different times, different volumes. So it does take more effort having more assets. But when you do have more assets, for example, if you trade Forex and you trade indices, you have that ability. Whereas if you have no opportunity at the moment in the Forex market, you can look over the indices and trade there, or you get to choose which one's going to give you the best opportunity. Now, it's very important that you don't get lost and start confusing it and then just trade them all because you can trade them all. You're probably going to hurt yourself that way. Having those more assets does allow you to break down and choose the best ones. Like I do, I come through and be like, okay, these are the opportunities I have. And then I tell you guys straight off the bat, my best setups, Aussie dollar, Japanese yen, New Zealand dollar, Japanese yen. Great British Pound CAD may give us the opportunity, but I don't love the way it's set up. So my best setups are Aussie dollar, Japanese yen, New Zealand dollar, Japanese. See, now all of these pairs may give me an entry and a trading opportunity today, but I have my best pairs. Right? My full concentration is more invested in just these two, even though I have a watch list of 5. Same thing. $50 pip slippage is terrible for traders who risk 1% with 3 pips. Yeah, well, you can imagine if you got 50 pip slippage and you're risking 1% per 3 pips, you've just blown your account. But yeah, I mean that's something you need to be aware of what news is coming and how it's going to run the market, and you need to be analyzing that risk. And it was interesting. I want to say interesting how many emails I got from traders going, oh, you guys had a system error. I had my stop loss set here. I got closed out here. You have a system error. You like put that money back in my account. And I was just like hang on, what? I was like, I was just baffled. I was like, it's like traders have never experienced the slippage before. Maybe they haven't. But it's very important that you understand what slippage is and how you do avoid it because it is a real risk in trading, and there's no way of getting around that risk. We don't see it very often in FX because we don't usually get that very volatile market. You usually get a lot of it in equities markets, like you don't get filled at the right time. Um, we don't see a lot of it in FX, but when it does happen quickly, and you can cop some pretty bad slippage, and it's important that it's part of your plan and you understand what's going on in the market when you are risk on, so you know how to manage situations like that. Whether you be hedging, whether you be sizing down, whether you be closing the position altogether, reopening it after the news if you're around the same area, whatever it might be. But it's part of being a risk manager and it's part of your job, realistically, as a trader, to manage these things. It's not something we control. It's not something that we can alter how quick the market moves. We can't do that. That we're the same as you. We're also trading. We're not able to change any of that. So um, please do ensure that you're taking slippage into account in your trading plan. You know how to manage it or how to avoid it. Once again, it is pretty rare. It is pretty rare that people get slippage, but it's not, impossible. It can happen, and it can happen pretty bad. Like you said, Clayton, where you cop 50 pips slippage. That's a large amount of slippage. But it happens. It happens, and that was on GU. Did you say? Have a look at GU chart moves. Yeah, there you go. 132 pips. Yeah, so like let's say he had a stop loss like over the top here, he wouldn't have gotten sold out till up here. That right there was the slippage that poor mate Clayton popped. Okay. Now there's nothing we can do about that because like it's our money that you cop this slippage on, right? So we're the ones that lost. While you are managing the account and you lost it as well, we also lost the money in that position. It's our equity you're trading with. So when traders are asking like, oh yeah, put that money back in the account, it's like, first of all, it's our money that's been lost in this situation. And second of all, it's not something we can control. That's the markets. That's not something a broker control or a liquidity provider can control. So yeah, look, I don't want to be a downer or anything. All I'm just trying to say is make sure you've incorporated potential slippage in your trading plans. Now back to what we actually want to trade with today. Is your money that was lost, crazy people that don't get it. Yeah, well, I mean, a lot of people fail to understand that. They'll like blow an account or I don't know, do something, lose some money, and they'll come back and be like, "Oh, you owe me this." That shouldn't happen. I was like, you do realize that you're trading with our funds. Like that's our money you've lost. It's not your money you've lost. It's like when you lost that $300, that $400, that $20,000, you lost our $20,000, and then they'll be complaining like it was our fault and that we owe them. Look, it gets messy. It gets messy, but yeah, it happens. It happens. So many on Discord don't seem to realize that they're trading for you. You're not just giving them money to play around with. It happens. It happens. It's not just in Discord. It's a range. But like, what can you do? I mean, some people take these opportunities and they run with them, and it's fantastic. And we love working with them, and it's really good. Some people prefer to. I think we should just leave it at that. Realistically, some people prefer not to do that. Some people prefer to look at outside factors and yeah, look at us as an enemy rather than a friend. But well, I mean, everyone at the firm and everyone who's getting funded, they understand that we've got the same goals. We're trying to work towards the same thing. So, um, what can you do? What can you do? Anyway, let's chat about trading. Enough about that. Slow today. Euro Japanese yen trying to get up. Aussie dollar Japanese yen also sitting around there, not really going to do it. Great British pound New Zealand pulling in. Getting up there. Great, Brian. Great. I'm going to take the pound CAD off my watch list. Okay, it might pull in to the area we want to trade it, but I just don't like it. So I'm taking pound CAD off the off there. I did not realize that there was a 50 pip gap to the stop. Thanks for letting me know, and I'll be careful during. Like that's not Bob. That's not like set that there is a 50 pip gap. Like slippage can be anything. It can be from like 1 pip. It can be to 2,000 pips. For everyone who's been at the firm a little while, you'll remember when we added the margin requirements on the Swiss franc. They've now been removed, but remember the Swiss franc margin requirements that we had? So you could only open a certain lot size on the Swiss franc. That was because we were expecting a high slippage event, and people would be like, it's fine, I use a stop loss. I'm like, it doesn't matter if you use a stop loss. If the market's going to move, 13,000 pips in a matter of seconds, your stop loss is going to be completely irrelevant. It is going to rip through that and you will lose the account. And that's the reason we had that extra margin or that extra requirement on that, is because it can happen. So Bob, slippage can be anywhere. Slippage can be from 1 pip, you lose out on 1 pip, which you probably won't even notice, to anywhere up to really bad slippage, like getting 50 pips. Once again, it's not something we can control. It all depends on how quickly the market moves and how well you can get out of the position. Sometimes it's hard to get out of that position. So, yeah, it's always important to plan for the worst, prepare for the worst, and hope for the best. But always be prepared for the worst. And the way you do that is by scaling down your position, maybe getting out of the position, hedging position, whatever it might be, when there is a news event around the corner. Yeah, so Great British Pound CAD is off the watch list. I can't see Great British Pound New Zealand dollar getting low enough to where we want it. Someone else in the Discord, I want to say, had their stop loss triggered over a 100 pip. Yeah, wow. Geez, that would have been a really which chat was that in? That's a large slippage. I've never seen anyone have 100 pip slippage before. I mean, I've heard of it obviously, but I've never seen a full 100 pip. Considering like the charts only moved like 110 pips, that would have been some substantial slippage. I see you're trading the New Zealand dollar and the Aussie dollar, which are highly correlated. Is this something you're taking into account? That is correct. Then that is correct. So I'm looking at both of them, and you can see I'm analyzing it the same way. Oop, hello. New Zealand dollar, Japanese yen might give us a bit of an opportunity for a first entry point here. Whoops, blacked out. Yeah, there we go. What are we sitting at? Sorry, Sven, I'll get back to that. 20 pips. Yeah. I like Aussie dollar, Japanese yen more, but New Zealand dollar, Japanese yen is going to give it. But yes, I do understand they're highly correlated, and I do actually look at that as well. Like I quite like the idea that they are highly correlated. Sorry, I'm just opening my MetaTrader 5 platform so I can go up and pull up New Zealand dollar, Japanese yen and start looking to fill this opportunity. If we can get up there. I want to break up above these highs. If we can pop up and some, keyword and some, I'll look to fade that back in. Now on the MetaTrader 5 platform, we did technically pop up a little bit above that. Spreads are still a bit wide for this. Spreads are a little bit out there, which aren't overly favorable, but see if we can pull that back in. Where are we? I can't. There. Monitor's being a pain. Okay. Where was I? Apologies. What's your ideal entry look like for this trade? Realistically, what I really want to see is a pop up. Maybe give me a pip or two up above. And then I'm going to look to enter first position. Now, you know how I do this? I do the 3 positions. I'm going to enter first position. Now, for this trade as a whole, I quite like it. We're sitting in this area here. You can see where we'll be popping up into. I do quite like the idea of this trade, so I'm willing to go full risk on this trade. So I'm looking to see if we can get up to around here, and then target area. I'm pretty confident in the area we're sitting that we can pull right the way back in. So I am going to set my target reasonably ambitious. Okay, I'm going to aim for like right the way back down to the lows of the Asian session today. And then I'm going to give myself a nice room. I'm going to go for like a 26 pip stop loss, right? So just I would have expected a 50 pip jump on NFP or FOMC, not CPI. Yeah, but the CPI is so important now that everyone's checking the inflation data, right? Because the inflation data is everything's being based off the inflation data right now. You know, the interest rate hikes, everything like that. So previously, I agree. CPI doesn't move much because no one really cares. But now, the way the world's changed and inflation's getting a serious problem, we're starting to see that maybe we should care a little bit more about this, and it's going to be a little bit more dangerous if we're not careful. Which is why there's a lot more movement and a lot more interest in the CPI data and the way it's moving. I'm going to enter sell limit order here. Put it in about there. About the same price, I think. So I'm just building my order the same way I have on the screen here, but in my MetaTrader 5 platform. Perfect. So back to you, Clayton. Looking for a pop-up above here, right? If we can get a little bit higher, I move that in just a little bit. See if we can get filled. Oh, it just missed. Just missed my fill. So I'm sitting in around here. See if we can get in here and pop up. I do like the way it's kind of bouncing off there a little bit. It is giving me some extra confidence. But if we can get up in here, I'm expecting a bit of a push, like a bit of a pump. And then I'm going to be looking to potentially add another position around here with the same target. Which would be about what? Will that be about 7 or 8 pips? That's 10. Yeah, okay. I'm happy with the 10 pip there. So I'm going to look for something like this. Okay, that's how my ideal position's setting up. Now, if we're getting up into this area, I'm getting a little nervous because if we go out here on the 30-minute, you can see if we're getting up in this area, we've already broken this high, this high, this high, this high, and this high. So I'm getting a little nervous if we do get up into that area. So I'm going to wait and see how we're vibing. I'm going to see what we're vibing if we do manage to get up into that area. But for right now, I'm looking to just short this here. Aussie dollar, Japanese yen still a bit short. Great British pound, New Zealand's trying. Nothing there. Close for euro, Japanese yen. Getting close for the euro. But by far, best opportunity right now is what we're looking at here. This is just my opinion, but year on year, the stars on events change. Yeah, you use 5-star system to gauge events and how they affect the market. Yeah. So depending on what's happening, all the news events will have different credibility. You know, as I said, the CPI data, the past like 4 years, yeah, it's been like okay, as expected, it moves like 20 pips. Happy days. There you go. Whereas now there's so much concentration on the CPI data, it's a bit like, whoa, now we're going to move a lot. We're going to move a lot. Interest rate decisions, very similar thing. Yeah, it was like, okay, yeah, they remain flat, same thing, moves about 30 pips. Now they're starting to move, bang, we're moving 200 pips, we're moving 300 pips. I've just been filled in the position here, guys. So everyone knows I have just been filled. Add my second position. Position's ready to go. All right, so we've got a very good entry point there. So we got filled in, and it's just run straight in our direction, which is pretty nice. Like Umich used to be 2-star event for me, and that's 4-star event. It's good that you Sven. It's good that you're kind of monitoring that as well. I like the way you do that. Very powerful to be controlling it in that sense. Your long Aussie dollar Japanese yen and will scale out as you scale into your short. Risky business, sir. Risky business. I don't know if I am going to be shorting it yet. I need it to get up here within the next hour. But in order for this to get up here, it'll be contradicting my analysis, which I've already entered in this to get down here. So, look, not overly confident in what you've done there, Bobby Boy, but well, it might work out for you, because if this does manage to pop up into this area, it does mean that I'll get filled. This extra position will get filled. These will correlate very, very similar. If we put them side by side, which I can do, we go ahead and put these side by side. Come on, man. We've got New Zealand dollar, Japanese yen, and Aussie dollar, Japanese yen here. You'll see that usually they're going to correlate quite on the daily. They're going to correlate quite similarly. Similarly? Yeah, we can put it side by side so you can see what I'm talking about. There we go. That's our position today. And you can see the way it's moving, right? Like, big green bar, little doji, then a pull down. Big green bar, little doji, and now pulling down. They do run together quite nicely. As usual, I mean, if it pulls down and just goes hits, I take profit, even better. Awesome, great trade. But as usual, I will expect it to maybe do something like this. It might even pull in and then sit up and then pull down or something like that. But I'm not expecting this to just run straight to the take profit. But if it does, I'm not going to complain. We are getting a bit of volume coming in at the moment. We don't have any. Yeah, it's fine. Stock markets are going to be opening up in 10 minutes. So all the pre-market bets are going to be being placed right now, which is why we're seeing a little bit of an increase in volatility. Both New Zealand and the Japanese yen stock market's going to be open up, which is where we're going to see that. Can you have a look at CAD Japanese yen? Sure can, my guy. Yep. Yep. Looking for a similar setup here. Could be on. 22 pips is achievable. So you need like another 10 pip pop up, and then you could be shorting. The only thing I'd be worried about is how like clear this space is here. That being so clear means if we get up above here, you may get free movement. And if you get free movement, yeah, like that's, you see sitting here, that's the recent low. It correlates to that high of the day. We get up above that. Both times there's kind of nothing to indicate that we're going to slow in this area. So if we do pop up, you might get some free movement up to this area. But CAD Japanese yen usually doesn't move too hot in the Asian session. Depending on how the stock market opens up here, the Japanese stock market, that'll determine whether or not that's going to be a good trade or not. But good eyesight, that is an opportunity which I missed this morning. All right. How you running for me? No worries at all. Glad I could help. I want to get this a little bit lower. I could even be looking to start taking some of the position off, to be honest. Trying to have a look at... Well, if you're wondering why I'm looking up, my trading platform is on my top monitor. So as I'm looking up, I'm looking at my actual trading platform and not the trading view chart, and analyzing what it is that I'm looking at for my next move, or how I'm going to either scale out of this position. Not just yet. I still want it to come a little bit further. I think we might sit around my entry point for a little bit longer. I do think we'll come back up, if not tap up above a little bit higher, which is why I have that extra order there ready for that to happen. And I got another hour before I'm going to close out any new positions. So I don't want to take any positions after 11 a.m. my time, which is in 1 hour. With this strategy, if I go too late, we're just going to be increasing in volume, and then my strategy is going to become obsolete when I'm trying to fade. However, I will hold positions if I'm already in them. I'll manage them. I won't look to just close out, because sometimes statistically it does still work out. So I'll still hold positions. I'm usually out of them by 11 a.m. anyway, which most of you would have seen in the Discord when I do follow up the trades. But it is something to be aware of. I'm not going to be taking any extra positions post 11 a.m. I could not have gotten a better entry point on that position. Interesting. I mean, look at that. Right at the top, I don't know if you guys can see that, but right at the top up here, I literally got, as it popped up, it just tapped in my order, and then it's come right the way down, which is nice. That doesn't happen very very regularly, so it is quite nice to see. 1 minute chart looks hot. It looks hot. We'll see. We'll see how this is traveling. It's traveling very well. A little bit too well for my liking. I know that sounds a little bit crazy, but it is traveling a little bit too well for my liking. I'm assuming Aussie dollar, Japanese yen is doing the same thing. Yeah. So this is what I meant when chatting to you, Bob. I was looking for shorts, and one of them already gave me the entry point. A bit nervous about buying that into that area, which is why I wouldn't have taken that position. Let's see. Let's see if we can get down to these lows. If we can get like here, I might take off half the position and pull my stop right the way in. So I was being very ambitious with where I wanted this to get. However, this is a big sell-off just prior to the market opening. We got 5 minutes until the stock market opens. So I wonder if that's an indication of what's to come, with everyone placing their bets. Stock markets have been rallying worldwide since the US dollar CPI has flattened a little bit. So we may see some shorts, but are you frequently an Asian session trader? I usually see people trade London or London US cross volatility. Asian session seems lower volatility. Correct. That's what I strive for. I look for the lower volatility in the market. So yeah, I usually trade the Asian session. Have for many years now, and I like it. I like it because you can judge the volatility. Well, I can anyway. I can judge the volatility a little bit better. Your scalpers, your position traders like that, they like the high volatility because they like the adrenaline and the movement of the market. The market moves a lot, you can make a lot of money in a short amount of time, right? The issue is most of the people chasing that volatility don't know how to make a lot of money in a short amount of time. I like this market because I can understand it. It gives you a lot of time to react. You can see I've been in this position already for like 20 minutes. That's a lie. I've been in this position for about 12 minutes. And I can sit here calmly, and it's a scalp position, but I've been in for 12 minutes, and I can sit here calmly and make educated decisions when I need to, because the volatility is a lot lower. I don't have to worry about it whipsawing and everything going crazy. And I like fading the market. I like fading moves, and there's no better time to fade a move than in the Asian session. We're going to hold on a little bit. I know we usually end the stream around here, but I am going to hold on for an extra 5 minutes or 5 or 10 minutes here, just because I want to see how the Japanese yen stock market opens and then how this chart reacts. So if it opens in our favor, I think we'll close this trade by the end of the stream, which is what I'm looking for. But if it goes against us, then obviously I'm going to have to micromanage it for probably the next half an hour, if not a little bit longer, which I won't be able to stream for. But the reason I'm holding on a little bit longer here is because I want to see if we can close out this position from start to finish on the stream for you guys. Now, usually we get in the positions, but then I have to close them out afterwards and update everyone in the Discord. That's just the way the positions kind of ran recently. But I'm hoping to see that. I'm hoping to see what we can do. Do you ever transition these trades into higher time frames? Take profit. No, I don't transition these ones into higher time frames. So I like to get a directional bias on currencies. That helps a lot. But I wouldn't transition any of these positions because I'm literally just fading volatility, and that's my edge. It's just fading volatility. It's got nothing to do with where it could move by the end of the day. It's got nothing to do with a government going to war with another government. It's just solely a big move happened when it shouldn't have happened, and I'm going to fade it. That's my strategy there. A move happened when it shouldn't have happened, so I'm going to fade it. So no, I don't look to transition this. This is purely off of the volatility in the early mornings. Now, it's not very often that people share their strategies, especially me. So keep that low, because the firm will probably be like, why are you teaching all of our traders how you trade? Now they're all going to trade the same as you, and we're going to be massively overexposed, which is a very real possibility. So keep that hush hush. But no, I like having this strategy to be able to trade live with you guys, so we can have a look at what we're doing, and I can run you through a strategy that's given me a lot of money over the years. All right, stock market's going to open up here in a second. In a few. The timer you can see here at 10 a.m. the stock market's going to open, and this chart's going to start moving a little bit. So as that counts up to 10 a.m. I'm going to start transitioning this stream onto a new streaming platform as well. Not like away from YouTube or TradingView. We're still going to be live here. But I mean like the actual back of house, which outputs it. So you might see all these overlays and different things change a little bit in the future. Just bear with me. I'm hoping it's going to improve the quality at a fair margin. So if you do start seeing me look a little bit differently and sound a little bit differently, it's because we're going to be changing a couple of things. Don't stress. Everything's going to be fine. You're still going to be able to hear me, and you're still going to be able to see my screen. All right, let's see how this market opens up. Let me have a drink of water. Correct. Correct. I agree with you. But the thing is, when we teach, we've noticed it before, when we teach something like a strategy, we notice that a lot of our traders go and just start trading it just because, like, oh, if they're trading it, they've done the back testing, they know it works, and they just trade and trade. And then we notice that a lot of the positions end up being the same. Now, not everyone knows how to manage those positions. So in a time where I would have got out, scaled out of the position, the other beginners would have set and forget and just held on. And then we'd be overexposed at that point in time because we had 200 traders go and trade the same thing that we just taught. And all of a sudden, all the firm's capital is exposed to those positions that aren't being managed correctly. So that's why we tend to steer away from teaching strategy. We don't want to confuse our traders. We all want them to have their own strategies to come in with their own style. Yeah, then yeah, fading the unexpected move is one of the basics. But the thing is, you can't do that always. And who's to say when that move has finished And that's where a lot of people get confused. If you fade an unexpected move, you get a big move in the US session and start fading it, and you notice that it just keeps going and going and going and going and going, right? Like look at yesterday. You look to fade this, where are you going to fade it? Where do you start fading? It's easy to look back on the chart now and be like, oh yeah, Jordan, I faded right here. That's easy to say, but realistically, as this is unfolding, where are you looking at fading? Whereas in the Asian session, it's pretty easy to find the points where you should be looking to fade these opportunities, which is why I prefer to sit in the Asian session. Right, well, stock market moved flat, I'm assuming. Went to the Nikkei. Hmm. Nikkei is being pumped. Japanese yen's getting shorted. Yeah, that makes sense. That makes sense. So this is going to kind of correlate with the way the Nikkei is going to run early morning. So I'm hoping this bull run from the Nikkei isn't too strong. Hoping it doesn't last very long. Something like this. Let's keep an eye on it. It is a very strong open, which is the reason the Japanese yen's being shorted. In return, the New Zealand dollar going up. All right, I was hoping that was going to go our way at the open. Turns out it hasn't. So I am going to look to end stream here in the next 5 minutes. So if anyone has any questions or anything they want to ask or any final pointers, please reach out now. Now's your opportunity to chat to me before I disappear for another week and come back next Friday. So if there is anything you guys wanted to mention or say, now's the opportunity. While we watch the trade, I will still be managing this trade, and I'll update everyone in the Discord. I am still holding on for this second position as well. Japanese yen shorts are risk off. Actually, a trade I think is valid, but it's hard right now. Hmm. Yeah, that's fair enough. That's fair enough. Japanese yen's been strange because it's usually like a nice safe haven everyone floods to, but it's been smashed for the past like 6 months, if not longer. That people are a bit like, well, it's not really safe anymore. It's not one of those like consistent ones like the Swiss franc that we can head over and invest in when we're a little bit worried. It's actually like no one wants to touch it. So it's interesting to see how it performs. Standard, standard. What's your bias on the dollar this week? I'm not touching it, the dollar, but realistically, I'd be leaning towards shorts. I'd be leaning towards shorts as long as the stock markets keep continuing the way they do. As long as this wasn't just a random bull push. How far are we away um, from being in a bull market on the S&P? We get another 2.8% climb, another 2.8% climb in the S&P 500. We're now in a bull market, right? 20% from the low is considered a bull market. If that S&P 500 enters the bull market, I'd be looking to go short. Go short US dollar, but realistically, you'd probably be shorting US dollar prior to that happening if we are to get up to that level. So bias is looking short, short term over like the next week, maybe 2 weeks. I'd be looking short on the US dollar. Not because I think they're going to do bad or anything like that, just solely because I think everyone's going to be running into the equities. Um, that's my opinion. No worries, well, Sven. Thanks for being so active today. I appreciate having a chat. It's been nice. All right, we'll see how this trade plays out. I'll update everyone in the Discord. I didn't take any position off. Obviously, this line down here was where I was looking to take some position off, and it's going to flip on us here. Now, I'm assuming the Nikkei is probably still going crazy. Reasonably. So I'm going to hold on here. I will still look to add another position over the top if we do manage to get up here. However, if I do enter in here, I might end up pulling the take profit in just a little bit. Okay, keep that in mind. Thanks for doing these streams, Jordan. I love them. Can't wait till next week. Nah, thanks for joining, Clayton. I appreciate it. Thanks, Tennis. Thanks, Carlos. I appreciate you all. Horman, really enjoyed watching the trade. Have a great weekend. Thanks, guys. Thanks, guys. I will be back next week. Have a fantastic weekend. You know the drill. Take some time off. Spend some time with your friends, your family, and then come back Sunday or Monday and attack the markets. If you need anything at all, you can reach me in the Discord. Thanks, guys. Have a great day. Cheers.